Hello, today is September 19th, 2023, and it's time for some new stock picks. As always, I'll review the performance of my picks from this time last year, give a little bit of a market analysis, and proceed with some new picks for the next 12 months and beyond. This time last year, I picked, let's have a look here, Smith and Wesson, symbol SWBI. The stock was down 3.8%. Walgreens Boots, stock was down 35.1%. It had a disappointment on earnings in the last quarter or two. And I also picked Intel, INTC, which was up 24.8%. for an average of minus 4.7%. That's in US dollars, including dividends. That compares with the performance of the MSCI World Index as represented by the URTH ETF of 12.2%. It's an unusual miss by my picks, especially due to the performance for Walgreens. But it happens from time to time, and that's the way it is. And having said that, the picks that I come out every month with, they usually outperform the market. Well, they have outperformed the market by 73% of the time, and by 5.2% in total outperformance, for an average of 10.4% 1 year out, and as compared with the market of about 5.2%. The inflation has been the main point of concern over the last year and a half. In my opinion, it's primarily a monetary phenomenon due to fiscal and especially monetary stimulus that the various central banks around the world have been engaging in since March of 2020. And as we all know, they've raised rates now for the last year and a bit. And the inflation has slowly started to come down and perhaps stabilized, and we may be at an inflection point now where central banks could be pausing with their interest rate hikes, and at some point in the next couple of quarters or 3 quarters or what have you, they may start even reducing rates if economic activity slows down a fair bit. So equity valuations are still very high. Real estate valuations are high. So there may be a time to kind of pause a little bit and wait for even better valuations for like the general stock market. But we always have good ideas, I think, anyway, for individual stocks. And the thing I think now is going to have to be large cap companies that pay a decent dividend while we're waiting. Maybe the market is going to be flat for the next 12 months or lower, who knows. And also there's 2 possibilities, and we're never going to know which one is going to be. When the central banks start dropping rates, one possibility is that inflation is going to come back, and things like resources, energy, and gold will go up. Or the second possibility is that before that happens, the market will decline, and high-quality dividend-paying stocks will outperform the general market, and eventually when rates go down, then technology stocks will come back and do really well. So in the meantime, I think we're not there for the technology stocks yet. They had a good run this year, so it's time for them to take a little bit of a pause. So our top picks are going to be more in the consumer staple area and utilities, and with an energy stock pick for the possibility of inflation coming back down the road, even though it's kind of pausing at the moment. So top pick number one is going to be one of the ones from last year, Walgreens Boots Alliance. The company is still a good company. Long term, its prospects are still very good. It's just that the price has gone down of the stock, so it makes it a more attractive opportunity, in my opinion. So yes, from time to time earnings will not be as good as expected, but for long-term investors, that gives us a better price to enter the stock. The dividend is over 8% at the moment, and is already had a decline of its peak of some 40% or so. So we don't think there's much downside. There's more upside than downside on the stock. So that would be stock pick number one. Pick number two will be a utility company, a Canadian one, Canadian Utilities, mostly in Alberta. Again, with these sort of companies, which tend to act, well, the stocks tend to act as bond proxies. The decline in the price of the last 12 months was primarily due to interest rates going up, because there's an inverse relationship to sort of interest rate sensitive investments to the rate of interest. So as rates are now plateauing and down the road, maybe the next 12 months coming down, this would be a good place to be, we believe. So Canadian Utilities, stock pick number two, symbol CU on the TSX. And the third stock pick is going to be a large cap oil and gas company, Pioneer Natural Resources, symbol PXD on the NYSE. Decent dividend yield around 7%, and the possibility of doing better if the central banks come and lower rates prematurely. I don't think that's going to be the case, but the idea with having diversified portfolios is that you never know exactly what's going to happen in the future. So you have many different ideas, and hopefully more work than the ones that don't, and you end up being better off in the long term. As always, if you have questions as to whether these stocks fit in your portfolios or any other investment questions, please don't hesitate to give us a call. Thank you. Have a great day. Okay, bye.